What's going on, YouTube? This is Dave's Daily Trades, where I cover daily AMC technical analysis, price predictions, and of course, bring you the latest greatest news. I hope you all had an amazing Friday. Of course, looking forward to the weekend, guys. No work, just going over DD, relaxing, chilling, hitting the gym, and I am absolutely excited, but not as excited as I was today with AMC and looking at this freaking chart. We're going to go over exactly why the close today at $40.74 was a massive milestone for AMC. We're going to be comparing the pre-run up to the June 2nd, we could call that a gamma squeeze, and what similarities are playing out right now. And then lastly, we are going to be taking a quick look at some new SEC regulations that just came out and really hinting towards they know about the MOASS and they're doing everything they can to prepare for it. But without further ado, we're going to jump right into the info and then hop into the TA. And we're back. All right, everyone, a very nice start to the day today. So what happened right off the rip, we did have a little bit of negative price action, but really bounced off of this 39.80 level and really started the run up. The biggest thing is we do have the Fibonacci retracement scale at $40.60 on the dot, and that would be exactly the 50% retracement from the low at $29 and some odd cents there. Really good things because, A, we held this line just about all day. For the majority of the day, we were up above this range. Now, we did come off our highs, which the high of the day was $41.79, but that is absolutely fine because we held this area. We did have 1, 2, we can call this 3 and 4 over here, 3, 4 touch points on this line, confirming it now as support and continuing our trend higher. Now, what we have here, we're going to jump into exactly why I have this trend line drawn and what similarities it plays out for the the pre-gamma squeeze run-up. Now, I do have a few things drawn out here that I just want to briefly cover. The first thing is this red box here. This is from early May 4th, all the way to just about the 7th. This is really comparing to that floor that we have had over the past couple of trading sessions. Right here at $36.36, I have it drawn at, where we were very strong at this level. Exactly same thing happened here back in, of course, the beginning of May, but this was right around $9.11, and just so happens to be that 78.6% on the Fibonacci retracement scale, which we did touch down on the 30th of September. So now that we are kind of claiming this area right here as our floor, we are starting this trend upward, which I really love to see. And this is a very similar upward trend that we saw just about in the middle. So we'll call it September 7th all the way to the 12th, where we saw that upward trend line. So we do have a few more days of this upward trend before we start to see some breakout candles. But the biggest thing that I did want to say here is we do have a gap fill. And of course, AMC loves to fill those gaps whenever it is applicable. And right now, this current gap is right around $43.45 all the way to $44. So that is what I'm seeing in the very near-term future, and especially as technicals are looking fantastic. And we're actually going to just jump into the one-day chart and go over exactly that. Let me just add the MACD and RSI. So, of course, why we're starting this uptrend? Well, pretty simple. Of course, bullish momentum, options data, which we are going to take a quick look at, is looking fantastic. And we did start the MACD crossover, and that just happened the other day. I love to see that, guys. MACD crossovers for AMC always lead to some very nice price action. So we are on day 2 of this MACD crossover, and I really hope to see volume pick up and, of course, the overall momentum of the apes to stay as positive as it has been for the last couple of trading sessions. RSI is now sitting at 53.86, and my rule of thumb is anything over 50 on the RSI scale is bullish, below 50 is bearish. And the biggest thing is AMC loves to go parabolic once we get over that 70 range, which guys, the 70 range on the RSI scale is that overbought territory. But that is when AMC runs like crazy for whatever reason it may be. So we do have a little bit of growth to go until we get to that range. But of course, it is looking just like I said, right over in this territory right here. So we'll see what happens. We'll see how this plays out. But guys, this is looking fantastic. My price predictions for Monday, I do have to say, we are going to play around and flirt with this area right around $40, testing it as support and then moving to fill this gap up here at $43, between $43 and $44. Now, the big thing is we closed at $40.74. We had 41,910 calls expiring in the money at $40. So since we did close, that is really great news for the apes. And additionally, on top of that, we did discuss yesterday that the max pain was $38.50. So we were expecting shorts to be in full force today to drive us down, which has been the story in the past. But interesting enough, we didn't have a crazy day. We were only up 1.67%. But the fact that we're still able to push above that max pain level and above that $40 range really tells me that shorts don't have the ammo that they had a couple of months ago. So really interesting stuff playing out. And we're going to hop right into the options chain for AMC like we did cover. And actually, sorry for the mistake here. I said we had 41,910 calls expiring in the money. Well, actually, we had 72,171 calls expiring in the money today at $40. Now, of course, going over this, extremely bullish. And I mean, who doesn't want to see $40 again? I know I was very excited to see that support just hold up throughout the entire day. Now, we'll take a quick look at the options flow for AMC. All in all, it's really mixed right now. But of course, the weekly options at that $40 strike was incredibly bullish. But what we're looking at right now is a premium range over $100,000, looking for those big whales to see what they're actually doing. So total open interest as of Thursday, so yesterday, was 2.3 million call options, 1.3 million being the calls, and 965,000 being on the put side. So nothing too crazy over here. But of course, looking back at some previous videos of mine, looking at the call history, nothing really seemed all that interesting for AMC looking at the beginning and middle of May. So of course, nothing is really going to show because whales aren't going to jump to the bullish side until their conviction is 100%. Now, of course, we still have some room to go. We still have some massive areas that we have to conquer. And until that happens, we are not going to see this options data really be very, very bullish. So we have some time. Be patient with this. And of course, I'll be posting every single day until this shit goes down to see when the big whales jump in. Now, the biggest thing I really have been excited to cover today was a new filing from the SEC. So what is this? I know a lot of people have been talking about this, and honestly, a lot of people really pissed off about this stuff, and I can absolutely understand why. But we're going to jump right into this and go through this and read it real quick. The biggest portion comes down here, section 1 and 2. Self-regulatory organization statement of the terms of substance of the proposed rule change. The exchange proposes to amend its rules to add new rule 7.13, trading suspensions. The proposed rule change is available on the exchange website, yada, 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 at the principal office of the exchange. Yeah, for sure. In this filing with the commission, the self-regulatory organization included statements concerning the purpose of and basis for the proposed rule change and discussed any comments it received on the proposed rule change. The text of those statements may be examined at the yada, 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 all these different areas and subsections down here. So we are talking about trading suspensions. And right now, the current standing, this is only a quick little snippet of it, goes on to say that they can actually shut down certain exchanges for up to 2 trading days. Now, why in the hell would they ever want to do that? This has never been a thing of a past, hence the new filings change that came out today, or yesterday rather. Why? What is going on? And sorry, 2 days ago. What is going on? Why is this happening? Of course, we all know the answer to this. It's really not that difficult. The exact thing that's happening is the SEC, all these regulatory bodies out there, they know that these market makers, hedge funds, banks, institutions, that they are in so deep with these short positions in GameStop, in AMC, in various other stocks. They know this is going to go absolutely rampant, so they have to have something in place to stop it from going to infinity. Because, guys, what we have to understand here is, on the flip side, these short positions, they don't have a certain dollar figure that they can run to. With calls on the downside, it can go to zero and you can lose all your money. Sure. But when we talk about puts, there is no cutoff on a price that a stock can actually reach. And hence the reason why we talk about this infinity loop. Because this stock, hypothetically speaking here, if no one sold and everyone just hold on for eternity, this could go to numbers that we've never seen before. It is an infinite loss that the shorts can endeavor here. I know this was a short one, guys, but that's really all I have to cover for today. I'm excited, so excited for Monday to see this bullish trend continue in our favor. I really want to see this gap fill. MACD crossover, extremely bullish. Expect some very nice, healthy price action to the upside, and expect that RSI to continue its climb all the way until that oversold area, and that, my friend, is when we're going to run. But with that said, guys, try to enjoy the weekend, get some sleep, because the war and the battle starts on Monday. Peace out. Tune in for the next one, guys.